What's up everybody, welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony, let's jump in. Okay, first up guys, let's look at the Chinese economy and concerns both within China and overseas that China could be facing serious economic slowdown as we move into 2022. This month, top leadership will hold China's annual Central Economic Work Conference. Investors and governments around the world watch this event very closely because it normally signals what policymakers seek to pursue for China's economy for the following year. This year's Central Economic Work Conference is particularly important because China is currently at a crossroads with its economy in the context of a housing crisis where regulators are forcing a bloated housing market to deleverage. China is seeing accelerated growth slow down. The question that the world is asking is, will China stay the course and accept slower but healthier GDP growth in 2022, or will it turn the credit taps back on to maintain artificially high growth rates? There are two main ways the government could do this. One, take the pressure off the housing market, of housing developers, and stimulate housing growth again. Or two, make local governments build more unproductive infrastructure, or some combination of the two. Now, at the beginning of the week on China Update here, we discussed the strong signal from Beijing this week that more infrastructure stimulus is on the way. But through this upcoming Central Economic Work Conference, we will have a far better idea of just how thorough infrastructure investment will be in 2022 and whether or not Beijing leadership has the stomach for slower growth. Domestically, there has been a lot of talk about growth in 2022. Yang Weimin, Deputy Director of the Chinese People's Political Consultative Conference, CPPCC's Economic Affairs Committee, expressed in a statement on Thursday that the biggest challenge for Beijing in 2022 is economic growth and called for more supportive policies from regulators to achieve growth, expressing, quote, "To maintain the recovery momentum next year, China should make great efforts to stabilize the growth rate. High-quality development also needs to maintain a reasonable range of growth." End quote. Economists and advisors in the English-speaking world appear to be putting their money on growth targets from 5% to 6%, down from the quote-unquote above 6% target set by Li Keqiang and other economic policy makers for 2021. This would be quite slow by modern Chinese standards, but still higher than what I and others have argued is the true underlying growth rate of between 2 to 3%. On Tuesday, the Bank of China, one of the big four state-owned banks, forecasts that China's economic growth could be around 5% next year. Morgan Stanley forecast 5.5%, and the International Monetary Fund forecast 5.6%. Okay, moving on. The United States and Europe just concluded their second so-called high-level meeting of the US-EU dialogue on China. According to the US State Department readout, the two sides, quote, also discussed the growing list of China's actions that are of concern, including those that breach international law and run counter to the shared values and interests of the United States and the EU. Meanwhile, it appears that Beijing may be trying to walk back its decision to sanction EU lawmakers and diplomats from earlier this year, a decision which I described at the time as a strategic mistake, which would cost China a lot of diplomatic and political capital in Europe, and would likely push political and economic European actors who had previously been on the fence or apathetic more towards working with the United States to pursue a more coordinated China policy agenda, something that Beijing wants to avoid. US media outlet Politico is reporting that the Chinese Foreign Ministry's special representative on Europe has been privately discussing with EU officials Beijing's intention to withdraw sanctions imposed on EU lawmakers and diplomats in exchange for the EU removing its sanctions on Xinjiang officials accused by some EU lawmakers of human rights violations. According to Politico, quote, European officials shot down the idea immediately. End quote. Now, this is just one report, so we need to take it with a grain of salt and keep our eyes on developments. But if the report is accurate, it is telling. Politburo member and head of the Central Political and Legal Affairs Commission, Guo Shengkun, published a long piece in state media this week entitled, quote, "Constructing an Even Higher Level of Peaceful China," end quote. Now we can see from this article that there appear serious contradictions between domestic elite self-perceptions of how the world currently views China and general international perspectives, especially of major powers like the United States, Japan, most European countries, and India. This is some of what Mr. Guo expressed. Quote, "The satisfaction of the masses with the construction of peace and security reached 98.4%. The international community generally believes that China is one of the safest and peaceful countries in the world. In the face of the grim situation in Hong Kong, we promoted the establishment and improvement of the legal system and enforcement mechanism to stop violence and control chaos and restore order according to the law, and push the situation in Hong Kong to achieve a major turning point from chaos to governance," end quote. He continued to talk about the high levels of peace and order in China and a generally positive international image China currently enjoys in the world today. Meanwhile, according to the most recent Ronald Reagan Presidential Foundation survey, for the first time since the Institute began surveying Americans about national security 4 years ago, a majority of Americans, 52%, named China as the nation posing the greatest threat to the United States, up 21% from 4 years ago. Russia, on the other hand, came in at only 14%. And last up, this sounds boring, but it's actually quite important, I think at least, and that's why I'm delivering it to you guys here. China has taken another step in its new push to seek better cross-border control of big data this week. This is just the latest in a series of moves the government has made in recent months to exert more control over cross-border big data. On Tuesday, China's Ministry of Industry and Information Technology published its 5-year plan for, quote, "improved cross-border security management of big data till 2025. The plan contains 6 key tasks, namely, quote, improving the marketization of data, improving computing power, playing a leading role in developing global technology standards, strengthening management of cross-border data flows, and more support for open source initiatives," end quote. For several months now, Beijing policymakers, in stark contrast to how some governments in Western countries treat data, have been calling big data both a critical, quote, "factor of production," end quote, and an important, quote, "national strategic resource," end quote. And data protection policies like this are increasingly reflecting this attitude. Hey guys, I'd love to hear what you thought about some of the updates we covered in today's episode, so throw your comments below. Always love hearing from you. Thank you for watching. I'll see you next time.